they end up overpaying taxes because they're scared of taking deductions. Don't buy the lie, it costs too much. What's up, family? Welcome back to another episode of Tax-Free Living. Now, I know things look a little bit different. That's because this is my brand new office. I just moved into an amazing penthouse in Medellin, Colombia, and I absolutely love it. And this is the new office layout. So get used to it because this is where I'm gonna be recording. But if you want to see a full tour of this 2-story, 2,500 square foot penthouse, let me know in the comments and I will give you all a tour. But other than that, the topic for today's episode, guys, is 5 lies that your CPA is telling you, okay? I get so many messages about, hey, my CPA said this, wrong. Hey, my accountant said that, wrong. So I compiled the top 5 list of lies that your CPA is telling you, and we're gonna talk about it today. But before we do that, guys, you already know, hit that like button, hit that subscribe button, and hit that share button. Share it with a friend, guys. You know, our goal with this channel is to grow it and impact as many people as possible, and you help us get there. Without further ado, let's get into it. If you see me looking down, because I got my iPad right here, because usually my computer's in front of me, but like now I gotta, we working through it, yo, we working through it. All right, so lie number 1. The first lie that your CPA is telling you is that they can actually help you save money on taxes. Now, this is a big one because most people don't understand the difference between a tax preparer and a tax strategist. So what most people do is they hire somebody and they think they can help them save on taxes, but all that person can actually do and have the capability of doing is just filing their taxes. And guys, it's 2023. We live in a world with AI. You can get a computer system to file your taxes if that's what you want to do, but what you need to be searching for when you find a CPA or accountant, you need to make sure that they're a tax strategist and they actually understand the IRS tax code and they can actually help you save on taxes. Because if your accountant is telling you you can't write something off, it's probably because they don't know how to do it. So it's not that you can't do it, it's that they don't have the expertise on how to advise you to do it properly. So a way to avoid this lie is before you hire somebody, ask them, hey, are you a tax preparer or are you a tax strategist? Now, if they answer tax preparer, go the other way. If they answer tax strategist, say, hey, okay, well, before I hire you, I need you to show me at least 2 to 3 ways that you can help me save on taxes, or 2 to 3 things that I could be doing that I'm not currently doing, right? Interview them. You deserve to know if they can actually help you save money on taxes. Because like I told you all before, when I work with clients, I work for free because I will always save you more money than I cost you, period. And if somebody can't do that, you should probably go the other way. All right, so that was lie number 1. Lie number 2 that I often hear from other people that they get from their CPAs is that, hey, don't write everything off because you cannot qualify for a mortgage. Now, this is huge because everybody wants to buy a home, everybody wants to buy a real estate property, everybody wants to buy some type of real estate. And when they hear, oh my God, if I write everything off, I can't qualify for a loan, that means I can't get my dream home. So they end up overpaying taxes because they're scared of taking deductions. So sad. So why is this a lie? Well, it's a lie for a few reasons. Number 1, in today's age, you guys, loan companies understand that entrepreneurship is big. Actually, I think 52% of people had at least a side hustle, right? So entrepreneurship is becoming more and more popular in today's world, and banks know that. Loan companies know that. So all you need to do is find a loan company that understands entrepreneurship. Because when I purchased my home 3 years ago, I purchased a 3-flat in Chicago, and it was $500,000. I worked with a loan company that specialized in working with entrepreneurs. Now, because they specialize in working with entrepreneurs, they understand that entrepreneurs are going to make a lot of money in revenue, but their tax return is not going to show that because they're taking advantage of deductions that they're entitled to. So what did this company do for me? Instead of asking for 2 years of my tax returns, which is going to show low income because I'm a CPA and I understand how to take advantage of the tax code, they simply asked for 6 months of business bank statements so that I could prove how much revenue the business was generating. What they care about is, do you have enough money to pay the mortgage on this building. So we need to understand how much money the business is bringing in on a monthly basis. And if that is, I think it was 5 times my mortgage payment, they're okay with it, right? I was able to easily get a loan and take advantage of all my tax deductions. And the second reason why this is a lie, guys, the second reason is because in the IRS tax code, there are certain expenses that the bank will add back to your income when you apply for a loan. And one of those expenses is depreciation, right? One of the biggest tax deductions that you can take, the banking system and the loan company will allow you to add it back. So for example, I bought a Lamborghini Urus last year and I got a $230,000 tax deduction for getting this Lamborghini Urus. So if that Lamborghini Urus took me from having $230,000 of income and it took me to having $0 in income, right? So I can literally show $0 on my tax return, pay no taxes, but when I go apply for the loan, they're gonna take that $230,000 depreciation deduction and they're gonna add that back to my income, which will then allow me to qualify for the loan. Okay, so don't buy this lie, it costs too much. You can take advantage of tax deductions and get approved for your mortgage or your loan at the same time. All right, so now lie number 3 is you can't write off your personal vehicles, right? I had a student that joined one of my master classes and she swore up and down. Not only that, she actually sent me screenshots in the DMs of her accountant dramatically stating that, hey, if the vehicle is in your personal name, you cannot write it off on your tax. This grinds my gears because literally in the IRS tax code, you can see it states that the IRS does not care whether the vehicle is in your personal name or your business name in order to write it off on your taxes. All the IRS cares about is, do you plan on using the vehicle at least 50% for business use? If that is the case, you get to write off that vehicle as a business vehicle, right? The IRS is not concerned about whose name the car is in. The IRS cares about what is the primary use for this vehicle. And if it's 50%, then you get to write off 50% of all expenses associated with this vehicle. So that's 50% of the interest on your car note, or 50% of the lease payment, or 50% of the gas, 50% of the repairs, right? You get to take the percentage use that you're using this vehicle for, and you can write it off on your taxes, okay? Now, the next question is, well, Carter, if I only have one vehicle, like, how do I understand what the business use is, okay? Here's what I recommend you do. I have all of my clients and students at the beginning of the year, we reset the trip odometer to 0. And then we use QUICKBOOKS or MILEIQ. We use one of the business mile tracking softwares, and you track your business miles everywhere you go. So for example, if your odometer at the end of the year says that you drove 10,000 miles, and then you open up your MILEIQ app and it says your business miles was 5,500 miles. That means that 55% of your miles that you drove that year were for business. Therefore, you get to write off 55% of all the expenses related to your vehicle, even if the vehicle's in your personal name, okay? So that was lie number 3, that's a huge lie, okay? Lie number 4, don't take the home office deduction, it will cause for an audit. Now, where do I start with this one? Because I understand their points, but their point is left in the past, okay? So what do I mean by that? So back in the day, there wasn't a lot of people working from home, right? Working from home wasn't a thing. Even if you had a business, right? You had to have a brick and mortar location, you had to have a building, you had to go out and get foot traffic in the street. So back in the day, the home office deduction did cause a lot of audit red flags because the auditors were like, yo, there's not a lot of business owners working from home. Anytime we see the home office deduction, we're gonna flag it to make sure that they're telling the truth. Fast forward to 2023, okay? We had this thing called COVID that happened 3 years ago, and COVID required everybody to work from home for 12 months, right? So what this did is altered the working flow of the world. It's altered the way we work. Now, everybody works from home. Like, working from home is not a surprise if you have a W-2 job or if you have a business. Most people can work from anywhere in the world and make money in their business. Due to this fact, the IRS understands that. They understand that the home office deduction is a deduction that majority of business owners are gonna have, and they're gonna be able to take it legally and ethically. So they're no longer wasting audit resources just because somebody has home office on their tax return, okay? So this was valid in the past, but it is not valid today. Lie number 5. Okay? Lie number 5 is that education is not tax deductible. I've heard a few CPAs say this, and we actually had one of our students go through a recent audit for their education expense, right? And we fought the audit, we came up with all the proper documentation, and we won easily. And that is because the IRS tax code says if you have education that is related to your business, it is 100% tax deductible to you, the business owner, right? So if you buy a course on how to get more leads, or if you go to a conference on how to get more sales, or if you take a course on how to enhance your deductions, right? These are all curriculums that is designed to help your business grow and make and maintain more money. Due to this fact, this education is 100% tax deductible to you. And that is one of the most beautiful things about being an entrepreneur, is that you literally get rewarded for educating yourself. Matter of fact, I'm gonna do a whole separate video on education deductions as a business owner, because that's how important I think it is. That's the top 5 lies, guys. And please, again, don't buy the lie, it costs too much. Okay, so if you like this video, guys, hit that like button, hit that subscribe button, and please share this with a friend, because I don't want them having these issues with their CPA misleading them, right? So get your facts right, and I'll see you all in the next episode. Peace.